Yeah, are we?
Yeah, we just had this. We just had this nice little break right now. It just happened. Of course, it happens right when we go on break. I don't know how it
Did we
knows.
renew our? Did we restart the recording?
Yes, we did.
Perfect.
So we had the break. Here's our 2-pip break. It broke right through this supply zone right here. That was, so we can take that off, or that demand zone. Here's where our D was. Move this over here, and right now we have a little bit of an area right over here. We look at our Fibonacci ranges. And you can see here's a nice little red line, red zone. Broke through the blue, coming back up to retest this area a little bit. May give us another chance. If it comes up and it retests this blue this fib line, now the question is if we can get up here to get us into our sell zone. That was a nice strong move down. This one candle didn't really give you much of a chance to get into it, but we're still waiting for the blue. We have the blue candle pull back. Now this is a nice drop. It's basing again. It's forming another little test. What I would do is I would put an entry right at the bottom of this blue candle. If it comes, do a buy stop. Let me see if I can, or a sell stop rather. Take profit, stop. This is demo right here. Be a sell stop. And the sell stop would be right at the area right now at 42.20, 42.87. It's 42.20, 14.28. This way, if it comes up and retests the wedge, this was our first target. This was a target zone here. This was basically the bottom where the D was. So anywhere inside this region right now, you could probably take it short. Let's see where our moving averages are, where our strength is. US is strong. US is strong by 3. Nice little pullback here. Just let it come to you. Just let the price come to you.
Oh, yep. This might be your perfect entry. If it bounces off that that yellow moving average right here.
Yeah, we have the trend right here. We have our trend. We have the yellow moving average at 16. There's a nice little rejection there.
Yeah, that's. And all of your hull moving averages are all in the same direction for a
They're all red.
sell.
And like I said, the U.S. is still strong. It was strong by 3 at the break. This is strong by 4. This is strong. The U.S. is still strong to the downside. This is the pullback. It came back right up to our 2-pip line, rejected it. It's rejecting. Any place in between the top of the wedge. You could move this thing up a little bit more if you wanted to. Make sure we have our 7 pip stop, 18 pip profit. Here we go.
That's exactly what we needed. Look at the way that the moving averages are pulling out of there. This is really nice.
Came up, nice little rejection there. And make sure we have our stop in place. Take profit, we'll put take profit of 7. Stop at 7, that's close enough. Here's our target. And here I got filled on right here at the red line, 1431.
Just gonna check a couple things, see what we see here.
There's our stop. Here's our first target, and then we're going to bring it down here for another 12 pip target. So here's still the first target. There's the first 7 pip target. And we'll just take it right up to that. Now we have a lower, here's a high, lower high. Right here, we have a lower low from this one. So now we have a lower high. This is our range that we're looking at right now to monitor. We have a low, a lower low. So now we have that lower high. We don't remember, we don't get a lower high till we get a lower low. So here is a high, here is a low. This lower high doesn't get qualified until we get a lower low. So now we have lower high, now we have a lower low. And here's a low, now we have a lower low. So right now it's starting to trend to the downside. All our moving averages are in the right place. Came up and retest the bottom of the wick of the wedge.
All right, this is looking nice.
And we did get a close. Remember that this target 1 was reference to the D on our when we had our original wedge. And that was broken. And that closed below it. That's a good thing. And now it still seems to be following these moving averages. You still have a. Remember, I also said too is once it breaks the bottom of the wedge, you can put another trend line to where it had this rejection of the high. And then you can use this to sort of monitor your trade. This is a valid trend line. It'll be more valid once I get another hit on here. Somewhere along the way, it'll be a little bit more valid. But right now, it's still in play. The trend line is still good, or the wedge line is still good. I just wanted to highlight that a little bit. And you see, like, here's a wedge, here's a break, here's a hit. You had 2 hits onto the wedge that was both got rejected. Dollar is still stronger. Dollar is still stronger, and the dollar is still stronger. Now I'll go to the 5-minute chart. So it doesn't play with our head so much. Expand a little bit. I'm just going to take that off. We don't really need, I have the stop and targets on here. And so right now it's testing the top of the wick on this nice big 5-minute candle. This was a pretty strong rejection down here, right here at the blue fib line.
But what doesn't worry me is that we have our hull moving averages. They're all in the same. They're pretty much saying, hey, it still has room to the downside. So
Yeah, if you look at the hull on, now we have a little bit of a green bar on the 1 minute, but your 15 and your 5 are still red.
So, Janine, that's actually a custom indicator that we have. One of our traders is also a programmer, and he built that for us that so we could use. But we're trying to anyway. There's work in progress to bring that in house so that it's just a little bit more complicated than we would like to make that available for everyone.
Came back up to the top of the wedge. It got rejected again. Our moving averages, our RSI is starting to point down, coming out of the 60 region. This one came right up to the 60 and is hooking back around. Hopefully it'll stay that way. I'm going to move this stop up above. I'm going to move it up a little bit more. I'm going to use a 10 pip stop on this one. I'm going to keep an eye on it. I just want to keep it out of harm's way. I'd just sooner get myself take it out rather than have that take me out. I'll mark the 7 pip region for it. I'm looking at this area to hold. There's a little bit of a wick over wick. It dropped, wicked.
You got that moving average. We'll see how it's going to interact with that on the 1 minute.
And we also have our 30 period L. Our 30 minutes 62 is right here, or 62 is right there.
Okay, that's significant. So I wouldn't be surprised if it came up and tagged that and then
I'll
took
give that
off.
a little bit more room here. Actually, I'm just going to visually keep that. That's 12 pips. But I want to make sure I keep this out of the way, because if I get stopped out, I want to be the one to take it out.
Yeah, you don't want to. There's too much going on here. I'm not worried about it going much higher than this,
If we go in here and we have 7 pips, is right at the 7 pips area right here. This is my, what I'll call my stop zone.
Yeah, ever since you started implementing a stop zone, I've been putting that into just kind of an area that it's not a hard stop, because sometimes price likes to do its own little thing, right?
Right. Like I say, I like to keep it. We have this nice little trend line. I want to keep it wherever the current candle is. I want to keep it above that trend line. So that way, if it breaks it, now I should be able to keep on tucking it down a little bit tighter. I still want to respect. We have the 30-minute 62. We also have our 5-minute 62 way up here at 1442. So I want to keep my stop away from that. And we still have our 13 moving average at 41. So these are all both pretty much the same spot. Usually don't like moving my stop, but sometimes you just have to give enough room to keep it out of harm's way. Obviously, that was a pretty strong. That was a nice big strong move just before. And we're right at the market open coming up right now.
Well, let's see what happens.
Came right up to the 30-minute 62. It was rejected.
We got a wedge alert.
And that would be, let's see, what do we have? Euro US descending. That's the one that we're
Right.
on.
Right.
And we're already descending with it. So let's just play this one out as we have it here.
All you would do would be looking to draw that very similar wedge, right? It got the alert when it came back up, so that's interesting.
Yeah. But in the same direction that the original one was.
Yeah, I don't see that often. Usually when they have a lot of them all together, they'll be in different directions.
And actually what we're actually looking at, if we had the alert at 9:30, which is right here. This could be interesting. We had the alert at 9:30, descending, which is basically following this trend line right here. If I were to be drawing this wedge, I'd be looking at drawing it with a descending, starting at the top. I come down here to the bottom, come back up here to the top, and I would probably flatten this one out. We have our A, we have our near hit here. You could almost even do this. Have a nice little trend going up here. This is almost like a little flag pattern right in here.
Our 1 minute haul is flipped, so but that's not indicative of anything. That could just be a little bit of a pullback.
Yeah. Or could be looking to break out at the top of this thing.
It wouldn't be the first time I was wrong.
Well,
Won't be the last.
it still has the this area up here it's got to get through. This is the original wedge we had right here where the heavy orange line is. I'm still going to keep it over here like this. I'm going to line my AC, keep that as a steady trend. Looking at this as a pullback. The top of the wedge is still up way up here from the original wedge is still up here. Still has to get through all this. It looks really busy, doesn't it?
Yeah, there's a lot, even for my eyes.
There's a lot for even for my eyes. I still want to see this top be respected. This whole zone, I think, needs to be respected still.
Yeah. Yeah, if it would slice through that supply zone, I would be a little bit concerned because there's that would mean it could potentially go to a new high, and right now it hasn't been this high since like
We have a nice little
3
trend
weeks
going right here. So this is basically our new wedge right here.
Yeah. So it's been 3 weeks since it's been this high. So not insignificant, but this could be a very strong move if we get the right side here. Just so you guys are aware, this move is not 7 pip move, right? It's not a we've been whipsawed a little bit, but we're dealing with much bigger moves than what we actually need.
So this has been one of the problems we've had is that by the time it breaks out, it retraces, so you can't quite get your 7 pips. Then it comes back into the wedge and you think, okay, now what do I do? So all I can do is just find out where other trend lines are that are being respected. Like here's a hit, here's a hit, here is a hit. So this trend line is being respected still, which was still on the other side of where the original wedge was. Here's where the original wedge was, right here. That was the original wedge. So the trend line that's still respecting that.
Yeah, our hull at the 15-minute is still red, which means that it hasn't decided that it was going to turn around. If the 15-minute hull turns around, I will be out of this trade. So if it goes green, that will be one of my indicators. That's my what do you call that? Emergency exit.
Euro crap stop.
Yeah, exactly. That's one of the things. If that would happen, then I would really evaluate my my situation.
Let's see where our 30-minute 62 is here.
Let's see.
Here's our 30-minute 62. It's right battling right around here. It's right between. We've got the 5, the 30-minute, the 13 moving average. It's all consolidating right in this little area right here.
What was that?
It's some alert
Oh,
someplace.
all right. Well, no, not there. We're coming up to the to that box we were talking about.
Oh, actually, what
Oh,
happened? Well, I got stopped out is what happened. That's where
oh
that
no,
was.
that's what it was.
Yeah.
Hmm. Let's see here.
I'm going to take this alert off here.
That
See how this thing
upper
is just channeling all the way up in here. This is just a channel is what this is. It's a
yeah.
significant channel, but it's nonetheless, it's still channeling right back up to retest this area up here. That was such a nice little breakout through there.
Yeah, it was.
Didn't give us a chance to get our from here to here. Well, this is showing 10 pips, so I don't see how we would have been able to get that 7. Certainly would have gotten 5 out of it.
Yeah. It didn't stay down there very
But
long,
the question
so
was
you'd
how
have to be on it.
I mean it came down, we got back in again, we followed this back up and got back into this area. No reason not to at that point. But now it's just taking off here to the upside. Still has to get through this area.
Yeah. I'd be surprised if it did. But like I said,
And so you just play the game of probabilities and just try to do the best you can with the method that we have. We're going to get stopped out. We're going to get whipsawed. But you stay the course, and if things
yeah, because if you know
continue
your
to
win rate, right?
if they continue to not work, then you have to reassess your strategy. But right now, the strategy is still relatively sound. It's just that right now we're dealing with some very narrow markets, and then very strong moves when it does
There
decide
we
to
go.
move.
I got another indicator that I use that I don't talk about, but it's flipped to the downside, and there's evidence that it's going to come down. So, but we'll see. Just trying to get an idea here. Yeah.
Still respecting the supply zone. And so we had one here earlier from the first alert. We had this zone. We can actually probably slide this one down a little bit. That's what they kind of call a level on a level.
Hmm.
And there was a descending wedge that we had.
So Christine had a question there, Al. Your take two T2 is 12 pips lower than T1 by the D of original wedge. I'm not sure I understand.
This was the original wedge, was the D right here. This is target 1.
Oh, target 1. Okay, I get it.
Yeah. And then we had another target down here, which was based on the B. So we had the B target, we had the pivot of the B, we have the pivot of the D, and this was our range right in here, which is pretty much where it came right into. And we had the new wedge alert, we had it pretty much right in this area, right like this. It didn't really give us a this was the descending part of where this new alert came in at 9:30. It did break that, but it's going to have to run into this area right here. And see, that's at 41. The bottom of this is at 46. Again, this is only 4 pips, 5 pips. Here was the near hit. Here was the trend line. Now it's breaking to retest. I believe that was the original. This was the liquid. Let me take this one off. This is still a significant trend line right here. Zero strength meters are doing. This was still battling for last place. This one, you have the 4-point spread on the 5 minutes. That's not healthy for our short. Like I said, I did get stopped out on this one.
Daddy, you're rolling down in the hill?
Yeah, rolling down the hill with 5 pips. I wish it went 5 pips.
Bye-bye, Dad.
Yeah, my little guy's like, oh, Daddy, that's 5 pips rolling down the hill. Because that's what he sees when he sees the charts, is he sees up and down. He sees hills and mountains. So trying to get him used to, you know, some charts and stuff. He's only 3, but at least he might have an idea. They absorb a lot of things.
Let's see what the 15-minute chart looks like here. So we still have this area right up in here. There's where the high was on the 15-minute chart. Here's where it was retested. This is what came up before it broke down. So we still might have a little bit of an area where it still could come on up to this area. Sometimes it's good to look at these higher time frame charts to see really where the action is and where the beginning of the moves originated, and you can also find some levels to where you may find some resistance. If we get a close above this candle wick, we need to respect that in this area.
I'm pretty confident I'll have him trading by the time he can do some math. So I have a very aggressive goal for him. You know, it makes a very interesting story.
One thing oftentimes you see too is you'll see a 10 o'clock reversal after the 9:30 open. You'll see a reversal after 10 o'clock. So if it opens up real strong, a lot of times you'll see it turn around after that first half hour, turn around and change directions again. We'll have to wait and see.
But this is why never over leveraging your account is a big deal too, right? It's not like we're putting 5% of our trading account in one trade, because we know our knowledge of system performance. We know how the system performs. So we will lose 30% of our trades. But because of our risk to reward ratio, we can lose that and still end up the month very profitable. More profitable than, oh goodness, I don't even want to throw a number out there, but let's just say that vast majority of people lose money in the Forex. Well, we're as a month over month, we're positive. And it's because of the systems that we're using and the AI and the refined trading and whatnot. So we'll see what happens here.
Yep. All of our moving averages are consolidating. We did get the close above the 62. We haven't got the close yet. It still has another 7 minutes to go before it's going to close.
this is where it gets really fun because we're already in it. We're already in some pretty significant drawdown, depending if you exit it or not. But your potential reversal point is coming up pretty soon because that's where that wedge is drawn.
Let's look at our 5-minute chart. Here's this is a 5-minute fib line. Right in this area right here. And we'll see if it can break through that. Like I said, this is the top of the original wedge, this top orange line. This is the top of the original wedge.
Let's see what happens
see
here.
if we get a pass and check on this 5-minute red line.
So it's sliced through there like butter. Ooh.
We'll see if it can come back and retest that that trend line. The short is definitely over right now.
Yep. You see how it broke out of there so aggressively, out of that top of that trend line? And it hasn't really. That's pretty special.
We'll see if it breaks through the top of this zone right here where the C was. And we'll see if it's going to head on up to this next fib line up here at 47.17. And if it breaks through that, we're looking at up here for where the A is. This one's all done. It's a nice strong candle up. Take a look at our 1-minute chart. Blue candle followed by a red candle, and now to a blue candle. Here's our buy zone.
You would call that a rally-based rally, kind of?
I'm gonna call it, yeah, this is basically a rally. It's basing right now. I said the target area is going to be up around in this area. Probably right. May get a little bit of a bounce off of this. Let's see how our moving averages are on the nice. This was a nice strong move. This is almost as strong as the move coming down. Let's take a look at the 5-minute chart and see how this is going to play out. If this thing, this would be the area, the next area that of concern. And that's right below this blue fib marker.
Let's see what happens here.
And let's see, we have a nice 4-point spread on the euro. The euro is strong to the US on all 3 time frames, coming back into our zone.
Well, the whole moving average flipped a couple candles back. I didn't notice it on my charts. I had it somewhere else.
I'm going to take this off. This one was violated. Here is our zone, came back into our zone. We didn't get the close above this one. So looking for the close above the C. We did have opportunity to get re-entered down in here. This zone's been violated. This trend line has been violated. Let's see how our moving averages on our 15-minute chart are looking. They're all in play. We have the crossover of the 13 and the 62 on the 15-minute chart. So all the moving averages in all 3 time frames are in the correct direction to go long. We've had the bounce off of the zone. It's basing, looks like it's basing right over in here.
So you're taking it long now, eh?
I took it long when it went back into this, when it first bounced off into here. I took it off of this candle right here.
Yeah.
Actually, I'm going to go and put a trade on here with this.
That sounded like it took like 15 trades.
Yeah, that's just
kind of crazy.
And I'm going to have my target up here, right around in this area right here. A little bit below that yellow line. 12 pips. The euro is still strong on all 3 time frames.
Well, like we said, hindsight's 2020. I just saw something interesting on another indicator. The move that we're in is actually like a daily convergence. So it's something that doesn't happen all the time. It's something noteworthy.
Convergence on the bottom or convergence on the
Top.
on the top?
Yeah.
Well, part of the thing is all the quantitative easing that's been going on. This dollar is going to
Yep.
get a lot weaker, and this
Yep.
could be a very could be the beginning of the reaction to those announcements.
Yeah, there's the euro is still strong even on the 8-hour chart. I don't go to the higher time frames very much, but for it to do what it just did to us, it meant that there was something going on at a more macro level.
Yeah, I would agree. The bigger money was moving it with that level of enthusiasm.
Like we were all expecting it to come down, and it appeared like it was going to come down. Everything looked like it. Everything was in play, except this is not a cop out. It's just the bigger players had something else, and so a lot of the banks and financial institutions, they don't use charts. They have monetary policy and everything. They're not like, oh,
That's where these fib levels come into play. These are pretty much institutional levels, but these are a micro level for the institutions.
right. So if we would put those on like a daily or an 8-hour, they'd be pretty significant, wouldn't they?
Yeah. And a lot of the same levels would probably be overlapped the same area, but just for the heck of it, let's just see what a 15-minute level looks like here.
Hold on
This
a
is
second.
at 1 hour.
You're saying you can just relative time frame change that on your lower level chart and it'll plot as if it's on the whatever chart?
Yeah.
Oh,
So
that's really cool.
So right now I could put it on a 15-minute plot.
Excuse me.
So look and see where so here's my 15-minute line right up here. This is the 15-minute green line. And so that could be, here's where green, red, blue, this is all 15-minute. So this is where, if this thing gets really, really strong, it has the potential going all the way up to these areas. But that's on 15-minute charts. We see a 15-minute level, that's a blue level for a lot of other different time frames. Put it back on a 5-minute.
Wow, that's so 14.716. You're saying that's probably a pretty solid target for this move.
Yeah, 1471 would be a 5-minute blue zone target. It just blew right through this red zone. So basically, here's the red, here's the blue next. So it
Would
just
you
it blew right through that. So this should hold.
would you be of the inclination that if it slices through a zone like that easily without kind of consolidating, it means that there's something going on at a much bigger level, like
Yeah, I mean
outside of.
normally you'll get a bounce. Let me see if I can put this on different, so I can change my texture on this. These are some really violent moves for a 5 minute
Oh
and
yeah.
on daily
Oh
chart.
yeah. Yeah, that's a big deal. Right now, it's bouncing off the top of that wedge line. I might take an entry as a buy. I might. If it pulls back 2 pips, leaves a nice wick, that would be a nice, what we'd like to call a pass and check.
Mm-hmm.
So it passes the line, it comes back, checks it, and then takes off.
I'm going to move this down to the bottom of that blue candle there. I'm giving it, again, with these moves like this, I'm giving these things a little more room today.
We're in a very violent market right now, guys. This is a little outside of our, I don't know, zone of comfort, more or less. Like this is big moves. So when you have these big moves, you got to give yourself a little bit more breathing room than you would.
You can see where we had the top of this red candle, the bottom of this. So right now, this is a zone that we're looking in. Let me just draw this out here. I'm looking at the top of this big red candle that drove us down, and we're looking at the bottom of this big blue candle. This area right here is, this is where the sellers took over. This is where the buyers took over. This is the area in between. So I use the top of this red candle and the bottom of this big blue candle. One or both should hold. If this up move holds, the top of this should hold. And right now, all of our moving averages are well in the right direction.
Yeah, so I got in on a buy. I'm gonna see what plays out here. If it comes back against me, then it does, but we'll see.
But right now, I want to keep this my stop at the bottom of this blue candle right here. So this is a little bit uncharacteristic of our trading method to give more room for the stops, but this is a little different market than we're used to trading in. So we have to adjust accordingly.
Yep, I would agree. There's some funky stuff happening. These highs like this don't always happen. They happen very rarely. So I don't want to make it more messy than what it is, but
I'm not sure the average true range of this of a 15-minute candle is, but I don't think the 36 pips for a 15-minute candle range is in 1, 2, 3, 4
no,
in an hour. Usually I think it's about 62 pips in a day, I think is more normal. This is like
absolutely
half of that within an hour's time frame.
Yeah. I like to say that the 15-minute candle is somewhere around 10 to maybe 15, sometimes 20 pips if it's a really big move.
These are probably normal size candle. Even this one is probably a normal size candle, and let's see what the size of this one is.
Yeah, that
this
would
is probably
be
more normal. Actually, I would venture to say like this one right here would be more of a normal size, 13 pips. Yeah, so say 13, 15 pips is normal. We're getting almost
30 some pips or whatever in just one candle. That's, to say significant, that would be an understatement.
Yeah. Let's see how it came right down to this little zone right here.
Yeah, that same zone you talked about. it just shows that technical analysis really does work. And when you get to a point, I mean, it just makes sense.
So from this point to
Oh
this
no,
point,
Roselle, no, we are not in a cell. Like, no, no. It is not a wise decision to even consider a cell at this point. It would have to do some kind of crazy correction. Sorry, I missed your question.
Yeah.
Go ahead. Sorry.
Yeah, right now from right now we have this move all the way up, and this red candle came all the way down to, it was only about a 23% retracement of this move. And so that tells me that this thing's going to go higher, and I'll be looking at perhaps this area up in here for a target. If it can start going back up again. This is one zone. I'll maybe split this in half about like that.
Yeah, that's pretty good.
Usually when you get a strong, I mean, this is one, two, these are three 15-minute candles. One candle pulled back. This thing, it may close red. How much time do we have left on this? 52 seconds. And we have about 1 more minute left in this session here. So you'll be on your own here in a few minutes. But right now we had this nice move up, came back, pulled back, retested the top of this zone right here. Bring that right down. And then this would be, if these work out the way they normally oftentimes do, you'll get like a little, this be a rally base, and then it rallies again up to 100% of what the first move was after the pullback. And that's where this 100% is, 78%. So I'd be looking at this as being a target. If I put my fib lines on, you'll probably see there's a fib line somewhere around in there.
So if you were to maybe provide a little bit of a guidance, or even let us, how many people in here are currently in this trade, or how many people have? Let's start it this way: how many people took a trade today? And if you did you take the right direction? Like, were you able to make profit today, or did you take a stop loss like myself?
And I took a stop loss as well. It happens.
Yeah, it does. And it's the reality of trading.
All right, you see where it has a nice little basing. It's going back up. It's retesting. It's going to come up and see if we can.
This is really nice.
So here's where the A was, the top of the A.
Excuse me. So I took my profit on one position on the Euro USD, so that basically got me out at almost break even. So just down a little bit, and I have one position with Euro USD in still. Now we don't really talk about this a whole lot, but we do take if we enter multiple positions, we're not entering two of our regular positions, right? In one trade, we'll only do more or less a smaller lot size to compensate for having two positions open, right? That, for example, I was in there with a lot size, but I was only using half of my regular lot size because I knew I had two positions. I had one at the break of the wedge at the top, and I had one on the re-entry.
And each position I have, when I do double positions, each position has to stand on its own.
Oh yeah, for sure.
Now we'll see if this thing can tag this little green line up here.
That's a really nice take profit target. I like that. What's that? 1471.
Take profit would be starting at 1475 is starting. Here's the take profit 1471. Yep. It's struggling right at
1471.
50%
solid.
retracement target right there. It's struggling. See if we can get a little bit more. There's the target.
That sounds like your target.
Yeah, my target was hit on that one.
I like that. That's solid. Oh, came back down quick. It's probably going to leave a pretty big wick. So you might not want to stay in there too long, right? If you hit your target, don't worry about getting it much longer. Just put the money in the bank, right?
Yep.
Because if you try to go for the longer run, you're going to probably erode most of the pips that you've made because price does like to come back. So I'm closing this one out with another little bit. So I say this often, and we like to say this, that your goal as a Forex trader is to end the day with the same amount of capital that you had in your account or more.
Let's see if it comes. There's a coming up to the 61%. There's a next target right there, and I'm out of everything right now. Trying to get filled.
Oh, excuse me. Let's see.
Yeah, so right there you can see it came right up into that halfway mark between the, and it could still go on up to this 1-to-1. I would expect a little bit of a pullback when it hits 78. I would expect a bit of a pullback. And on that note, we're running out of time, so we're going to have to give up this room. That someone else may be needing it. So again, I'd like to thank everybody for coming in. Sorry we couldn't do a little bit more today. At least we ended up with a little bit of a profit. So hopefully everybody was able to break even or better. And on that note, we'll see everybody tomorrow.
And thank you so much for showing up and contributing. We just really, really appreciate you guys and your commitment to pushing further than a lot of people do push in the Forex. So you'll get there, and we'll get there together. Anyway, God bless. Have an awesome day, and we'll catch you on the flip side.
Keep an eye on this trade, see where it goes. All
Absolutely.
Right,
Take care. Bye.